Welcome back. Comfortably above 18,100. We're up 0.5% on the benchmark indices. Not yet at the day's high, but you can see the recovery that took place after the markets went to that low around 1:30 p.m. One of the stocks that we're tracking today is Bharti Airtel, and that's holding up firmly in the green. Morgan Stanley today has come out with a note, overweight on Bharti Airtel. Their target price is 860. Now, 860 was the 52-week high on Bharti Airtel, which was hit in November of last year. After that, from November to just the last couple of days, the stock had seen a correction of nearly 100 points. It went down to levels from 860 down to 750. Morgan believes there is a floor to the stock price at 725, and they believe any correction to levels of 725 should be a buying opportunity. One thing that I want to talk about, when we talk about telecom sectors, the big trigger is a tariff hike. Now, the street is worried that what if a tariff hike doesn't take place? Then we are going to see earnings downgrades or earnings estimates coming down. The tariff hike has not taken place now for 13 months. In an event that a tariff hike doesn't take place, Bharti Airtel is perhaps better placed than Reliance Jio, because Reliance Jio started off with 4G subscribers. And Bharti Airtel has a lot of 2G subscribers. So the pure migration of 2G subscribers to 4G subscribers will drive an ARPU tailwind, which, say, a Reliance Jio does not have. So that's one of the points of differentiation between Bharti Airtel and Reliance Jio, which is also why investors, like Bharti Airtel along with, Reliance Industries. And this is, of course, the only pure play telecom company per se.
It's very interesting you brought this up, Reema, because I actually had a question with Gurmeet exactly on this. When what Reliance's earnings told us on Friday is that telecom is doing really well, but where is the elusive tariff hike, right? And especially when capex is pretty high as you go ahead with your 5G rollouts. So, Gurmeet, that question to you, you heard what the foreign brokerages are saying on Bharti. What is your preferred telecom play between the two? And a specific take on Bharti, if you believe that it can really take out the earlier highs of, 840 plus.
So, Sirpi, good to see you back. So I think
talk to you again. Thank you.
Telecom seems to be in a sweet spot with almost, I call it 2.5 players with the way Vodafone is right now. If you see Bharti, they have done a market testing where they have withdrawn the 99 rupees back in Odisha and Haryana, and the minimum recharge there is 155 and that's like sending the message that they are keen on tariff hikes, and they did guide for 200 and later on 300 ARPU in next couple of years. So I think if that goes on well, I think the intent is clear. Also, if you see, as you rightly pointed out, as Reema pointed out, they're gaining in not only metros but also in Class A cities over Jio in terms of the 4G mix. So that continues to improve, which will strengthen their ARPU probably more than Jio, assuming there is some delay in tariff hike. Continues to do well in the home and enterprise segment. They've stated out plans of monetizing the payment banks. And it's the only profitable payment bank as far as it is concerned. Also, if you see their EBITDA versus payouts, I think for the first time in last year or so, they're making more than what they are paying. So they're making like 35,000 crores against annual payouts of 23,000 crores on AGR and Spectrum, which means there is a scope for deleveraging because they are at about almost 2 lakh crore debt. So I think I'm pretty constructive. Valuation is reasonable and then should do well in my view.
Okay, all right. So that's about Bharti Airtel. Then, Gurmeet, I want to ask you on the ferrous space. Well, let's just tell our viewers first that JSW Steel is down close to around 1%, despite the numbers being a little bit better than what the street was working with. So the consolidated number should come up for you, both on the EBITDA and the margin front as well. It's a little better than our poll. A couple of factors played out. One is the standalone EBITDA per ton. Well, that improved. It close to have doubled on a sequential basis, and it was close to around 200 rupees ahead of our estimate of around 7,900 rupees. Bhushan Power and Steel, well, it delivered an EBITDA loss, which has turned it on. And also you have the European operations that looked quite good. Let's highlight what the brokerages are making. So the numbers are good, but brokerages on the whole, they believe that the stock is trading at expensive valuation. CLSA, they have a sell rating, target price of 640 rupees. They expecting the profitability to improve. In fact, for next year, they're working with around 12,000 rupees per ton. Capacity expansion they take on board, but the dependence on exports will be far more, and that is margin dilutive. They also say the stock at around 8 times EV per EBITDA, valuations remain expensive. Moving to Jefferies, they have an underperformed rating with a target price around 470 rupees. The stock trades at around 2.4 times price to book, and that's expensive for a stock that's giving an ROE of only around 10%. They have cut their EPS estimates by around 11 to around 13%, and keep in mind they're 50% lower than what the street is working with. ICICI Securities, well, they retain a sell rating. They say that JSW Steel is most vulnerable to the steel cycle because of the high debt that it has in its books, which amounts to around 70,000 crore rupees. Gurmeet, what's your sense on the ferrous space? You know, for the last couple of months, these ferrous stocks have done very, very well. But the street believes, particularly for JSW Steel, that it's too expensive. Will you go for another ferrous name?
Imagine we usually avoid ferrous steel stocks because they are more tactical. And as you made the point, you've got to be very nimble-footed in moving in and out. You made that point on 8 times on EV by EBITDA, and also at price to book is upwards of 2. Plus high debt, which can always be an issue in a rising interest rate environment. So my preferred pick would be Tata Steel. Let's say if I were to be tactical. One space we like, which is more a sub-segment of this, is the specialty and alloy steel. And there's one company which we just added to the portfolio, which is Mokan, where I think it's a more turnaround story with debt getting reduced by 15,000 crores. Bajaj Group ownership now almost 74%. Their turnover is now likely to be double at 6,000 crores. The results are due in February. So it's a reduction of interest cost of over 100 crores in a year. The top line is almost up 70-80%. Ownership, management change. So there are multiple levers in place, in terms of that as a story. So we prefer that as something which is more durable and more long-term than over steel. We will be tactical in case there is some correction in some of the ferrous names, even some of the non-ferrous names. Open to look at it, but only tactical.